any SME which is into manufacturing, they have around 60 to 70% of the cost is associated with purchasing of raw materials. We are actually financing their purchases of raw materials. On a broad spectrum, we are very much prevalent in all the manufacturing-based SMEs. Manufacturing in terms of auto customers or pharma customers, printing and packaging industry, telecom, and to a certain extent, textile industry, paper industry.
This is episode number 17 of MSME Talk with Pratyush Nalla on purchase financing. Welcome back to MSME Talk podcast. MSME Talk podcast is for micro, small, medium enterprises, startups, and entrepreneurs, in which we discuss with industry experts and experienced entrepreneurs on specific value addition guidance and solve queries to help build long-lasting businesses. Pratyush Nalla is a business head at Oxyzo Financial Services. Prior to that, he has significantly contributed in the laying down the foundation of operations and commerce functions at Off Business as a founding member of it. Pratyush is IIT Mumbai graduate. Oxyzo Financial Services provides working capital financing for buying raw material for SMEs, mid-corporates, as well as new age companies. Oxyzo Financial Services turned a unicorn after raising $200 million in a Series A fundraise in March 2022. Oxyzo is currently serving 4,000 plus SMEs across India, disbursing 4,000 crore per annum, and has 2,500 crore AUM with gross NPA at 1.2%. So let's talk about today's topic, which is purchase financing. Financing requirement to purchase the raw material is one of the critical need for the MSMEs in manufacturing and trading business. Some of the businesses in which raw material cost is a main part of the overall cost for them, it becomes important to have stable financing lines to fund the purchase of raw material. Any delay in financing for the purchase of raw material creates delay in the entire business process and decreases the earning margins. In today's episode, we will learn about purchase financing for SMEs and also about Oxyzo's purchase financing product for SMEs from Oxyzo Business Head Pratyush Nalla. Let me now welcome Pratyush on the show. A very warm welcome, Pratyush, to MSME Talk podcast.
Thank you so much, Tripti. That was really a very warm welcome, and it feels great to be on MSME Talk.
Great. So, Pratyush, let's have a quick sneak preview in your journey and how you're impacting SME sector through Oxyzo.
Right. So, I joined in as one of the founding members of Off Business way back in 2016 March, and at that point of time, we were still unclear on what our business model should be, and we were trying to explore as to where we could actually create a dent or where we could actually create a disruption. And one of those areas where we identified where we could create a disruption was actually in commodity commerce. And so we started off with steel as one of the commodities where we wanted to basically facilitate commerce and supply steel as a commodity to a lot of SMEs. And eventually we realized, that as we are supplying steel to the SMEs, there is a huge requirement for credit in order to, purchase these raw materials, whether it may be steel or any other raw material. And after doing a deep dive into, what percentage of costs is associated with respect to raw materials, suppose somewhere around 60 to 70% of the cost of an SME is associated with raw material. So that is when, we had that eureka moment when we realized, we should actually start off an NBFC too, and, provide a clubbed service to an SME where they can use this financing line to procure raw material from us. And this was actually the disruption point, you might say, when we entered into the B2B segment. And rest is actually, as it transpired, we grew into different commodities. We increased the number of product offerings within our financial services. Yeah, I wouldn't say that we have even scraped 1% of the possible opportunity which lies in the SME ecosystem currently. But we have been innovating different products, different methods in order to get deeper into our association with the SME. For say example, currently we are in raw material and financing, but we want to provide other services too. We want to be associated with business opportunities with an SME gets. So, that is how, as a group, we are creating an impact. But yeah, in Oxyzo, we are creating an impact by providing them different kind of products, structured products, in order to address their working capital requirements. So Oxyzo has been, creating a lot of impact through, offering structured as well as customized financial products to address the working capital need of the SMEs. As for the impact, we have around 4,000 plus customers today on our platform, and we are growing rampantly. We add nearly somewhere around 100 to 150 customers on a minimum every month, and we want to take that number up to, say, suppose 300 to 350 customers a month going forward. And the AUM currently stands at somewhere around $350 million. We have aspirations to actually take it up and triple the AUM size by getting deeper into our association with the SMEs.
That's nice. In a short span of time, you have actually achieved big numbers, both the ways, customers and the book size. Amazing performance.
Yeah, thank you.
So, Pratyush, let's move towards the main section of the episode, which is basically on the purchase financing. And we would like to understand more about this from the knowledge perspective. So, let's begin with this. So, what are the various types of financing available for SMEs business in India currently?
See, to be very broadly put, an SME requires three kinds of financing, to be very broadly put from a 𝐄𝐲𝐢𝐧𝐠 perspective. So, one is working capital limits to address their purchases, inventories, receivables, expenses, which happen during the operations of that SME. The other kind of financing, which is very much prevalent in the market, is basically project financing. So if they pick up a new project, so there's a lot of capex which goes into it, as well as it's involved with certain elements of risk with respect to the execution of the project. So that's a different form altogether of financing, where banks as well as NBFCs get together to do sort of project financing. And the third kind of financing would be the plain vanilla business loans, which is out there in the market for SMEs. Now, business loan addresses a very short-term gap with respect to the expenses which are being incurred by an SME. Now, these expenses can be either operational expenses, or they can be towards a short-term requirement with respect to purchases, or with respect to inventory management, or with respect to some machinery or capex which they want to take up.
So basically, three types of financing you have mentioned, which is primarily need of the SMEs, which is working capital financing, project financing, and to the remaining financing gap which is there, which is typically called as business loans.
Yes.
Okay. So could you explain a little more to our listeners difference between the working capital, purchase, inventory, receivable, etc. financing, or is it all same in the market? Because some places they call it receivable financing, some places they call factoring, some places they call working capital, somewhere place inventory financing.
Yeah. So see, out of all the kinds of financing which I've mentioned earlier, the biggest chunk is basically working capital financing, where everyone have their own niche, everyone have their own strength points in operating us in a certain segment of that working capital financing. For say example, some people do a lot of channel financing, which is somewhat similar to financing the purchases of the SME when they are actually buying through a a reputed supplier or a manufacturer. And there are a lot of companies which do inventory based financing. For example, say all traders or distributors out there, they need financing for managing their inventory, right? So banks are very much prevalent in inventory based financing. As you said, factoring, so that is receivable based financing. Some people call it factoring, some people call it supply chain financing. So all these are different words which are associated to a type of financing. But within working capital, these are the three segments where any SME would require funds for, which is purchase, inventory, or receivables. Apart from this, there are of course expenses. So that is also generally addressed by the OD limits, or OD limits which is given out by the bank, which can address the operational expenses which are being incurred by the SME. There are a lot of companies which are actually doing receivable financing, where it is also linked to sometimes, which is very well known in the market, called factoring, or which is sometimes also referred to as bill discounting, where the invoices of a corporate, the sale invoices to a corporate can be discounted by a bank or an NBFC, and the SME gets money upfront for that. So that is where receivable financing comes into picture, where a lot of banks and NBFCs are prevalent, and they have their own risk policies associated with the anchor to whom invoice is being generated to. So that is about receivable financing.
Let's take a quick break.
MSMEs and startups are looking for various kinds of support and upgrade. Are you a product service provider, expert, advisor, consultant, mentor for MSMEs and startups? Do reach out to MSME Talk to list your business. Check the link in the description. Thanks. So yeah, you have briefly touched upon the entire thing. And in fact, I would like to tell listeners also that we have in the previous episode 15 of the MSME Talk, we have covered about invoice discounting on Pred's platform, where a lot of NBFCs and banks come and provide invoice discounting or biz discounting to the SMEs and MSMEs. Yeah. Out of above all these things, Oxyzo is providing which all products?
So we are predominantly into purchase financing, where we are addressing a kind of working capital limit for the SMEs, as well as we also do drop line OTs or business loans, which are very, very short term in nature, to address the smaller gaps in the expenses, or whether they have a very urgent requirement with respect to procuring a material which is available at a super cheap rate, or which has availability issues in the market, and it's available at that point of time. So that is where we have positioned ourselves in, as well as we are getting deeper into our association with the SMEs, where we are also getting down into receivable based financing, where we are doing bill discounting invoices which are being raised by the SMEs to corporates or to anchors where we have comfort on.
Okay, great. So now, among all your products, so primarily let's focus on the purchase financing. It is also the topic of the episode today. What is purchase financing? We know the name, by the name we can understand, okay? But for a business, purchases can be of various types, okay? So purchase financing typically which bankers or NBFC gives, what is that?
Sure. So, see, as I was mentioning earlier, any SME which is into, say, manufacturing, they have around 60 to 70% of the costs of them is associated with purchasing of raw materials, right? And these raw materials, they add value to it, and they sell it to the corporate or the anchor, right? So that is where we want to get in, and that is where we have gotten in with respect to purchase financing, where we are actually financing their purchases of raw materials. This does not include, say, purchases of consumables, which are required to operate the factory, or purchases of any other items which are supplementary to running the factory. uh, we are purchasing those finances which are very much required to run the business of the SME, and which can be converted into a value adding product, which will be sold to his anchor or corporate. And that is how we actually also ensure that the funds which we are giving, those are uh, the risk is mitigated to that, because we know that the funds are being utilized in order to generate business for that SME.
Okay, so basically, any purchase which is going to get converted into a finished product where value addition is there by the SME, that particular part is usually considered under purchase financing.
Yes.
Okay, so let's check on the next filter, which is who can avail business purchase financing: manufacturers, traders, service providers. So you say service providers are out of it because they are not manufacturing anything. Okay,
Yeah.
manufacturers are in because they are making only for, so they can take it for the raw material purchase. Now, what about the traders?
So, correct. So, with respect to traders, we do not do purchase financing, just for a very simple reason is that, we do not want to get into a segment where we are actually, where they are actually keeping inventory in order to do some kind of a speculation based business. So, that's a risk call which we have taken, that we do not want to enter into those segments. And it is more than purchase, it is more of inventory based financing which happens in trader, where they require finance to maintain inventory, and to speculate and run their business. So that is one area where we do not do purchase financing.
Yeah.
And as service providers, you have already said purchase financing doesn't make sense over there. But with respect to service providers, there are a lot of ITES companies, for example, say, who provide a lot of
Okay.
IT equipments to major giants, right? So, say, suppose
Yeah.
laptops or computers to large corporates, right? So that is where they also require purchase financing to purchase that quantum of equipments in order to provide it to their in order to provide to the corporate whom they are serving through. So why we are okay doing purchase financing over there is because there is no speculation which is involved in IT equipments when they are supplying it to the large corporates, because they are majorly based on rate contract.
When you're talking about ITES companies, in ITES companies, you're saying someone who is providing IT equipment. But suppose if any service provider is using those equipment for internal consumption to provide certain kind of services
Yeah.
to the corporates, will that also follow under purchase financing?
So see, for services where they are internally using those IT equipments to provide service to the company, that would be more of a capex for them. It generally doesn't come up under purchase financing, because they are requiring those equipments to actually provide a service, which and the service is the main part of the business, not the equipment. Equipment is something which will help them to provide the service, right? In purchase financing, it is very simple, that whatever they are procuring, that is main revenue generating item for that business, on which they can add value, and or they can sell that raw material.
Okay. So, what are the different avenues available for purchase financing for business currently in India?
So see, one of the oldest purchase financing methods which has been available in India is actually trade credit, and that is a sort of a credit which distributors, retailers, they provide to the SME, right? So a certain part of purchases, an SME can address it through the bank limits they have got, right? But of course, an SME does not have the limits, which are sufficient to actually grow, or to ensure that they keep growing year after year. And that is where trade credit comes in, where they want to procure raw materials from distributors as well as retailers, which can offer who can offer them on credit, right? So that is a very unorganized segment currently. But by unorganized, I mean that it is very regional based, where a particular region will have a particular distributor, and that distributor will have a relationship with that SME for years, and on the basis of that, they have been providing credit to them. This purchase financing is also known as trade credit in the distributor retailer market, but it is much more unorganized form of providing credit.
It is basically a non-cash credit where credit period is given. So instead of paying the money immediately, they get a period of say 30, 60, whatever days
Correct.
timelines to pay back.
Correct.
So by the time they realize the money from their clients, and then they can pay
Yes.
back to their suppliers. So basically suppliers giving the credit.
Suppliers have been given the credit. So by trade credit, I mean supply credit. Okay.
Yeah. And what else are the different avenues for purchase financing?
So as I was saying earlier, a lot of NBFCs actually do channel financing, which is a form of purchase financing, where they associate themselves with large manufacturers. Say, suppose in steel, like JSW or Tata. Tata does a lot of channel financing in association with Tata Steel. They provide purchase financing for the purchases which are only made through Tata Steel, or for purchases which are only made through JSW. Now there are some benefits, there are some things which are some limitations with respect to this product, but yeah, this is also one of the forms of purchase financing which is currently available in the market.
So one is seek more credit from your suppliers. Next is go to your NBFCs or banks. Okay. New age. Any other thing you're hearing in the market?
No, these have been major forms of financing which have been.
So is purchase financing known by some other names also in the market?
It's also known as supply credit in the non-NBFC market, where the suppliers provide credit on the basis of their relation or on the basis of the year of association with the customer. And it's also known as channel financing to a certain extent when it is linked to a particular manufacturer.
Let's take a quick break.
Hey, MSME Talk listeners, hope you have not missed subscribing to our newsletter for the latest news, blogs, podcast updates. Check the link in the description. We don't spam your inbox, and hence we do have one of the highest rate of newsletter opening in the industry. Okay, so purchase financing, channel financing, and supplier credit. These are the typical names which floats in the market related to this particular facility.
Yes.
Okay. So could you just share some more information about the industry in respect of this product? Like who have been the traditional financiers who are more currently active? So you have shared the traditional financing part that traders or the suppliers used to give the credit, and that has been the major chunk.
Correct.
In current market, who are the current players who are more active? And what is the difference between the current players and the traditional players?
Right. So, see, with respect to current players, of course, Oxyzo has become very much prevalent right now in purchase financing, because we have sorted out those issues with respect to supply credit, which the SMEs used to have. So, currently, I would say Oxyzo is a very, very active player in purchase financing. And it is not like, say, suppose channel financing, where we are associated with one particular manufacturer and we'll finance the purchases from that particular manufacturer. But it's more of a holistic limit, where they are actually free to purchase from any supplier they want, and they are free to purchase even from one of our group companies of business also, if they want. And we do not force them to buy from off business itself. So basically, it will be a very transparent platform in terms of wherever they get a cheaper cost of raw material, we just finance that purchase from whichever supplier they want, and whichever supplier they think or deem is the correct supplier to go to. Right. With respect to how we are making a difference, I think this is one of our major differentiation factors when compared to say suppose people doing channel financing, because you are actually restricting that line to procure from a particular set or particular supplier. Even in terms of if I compare it with supplier credit, now these suppliers are actually associated with a particular manufacturer or with a particular brand, right? So again, when you are taking credit from them, you are basically limiting that line to a particular brand of raw material which you want. And at any given point of time, it's not necessary that that brand of raw material will have the cheapest cost, right? It might be that some other brand has the cheapest cost, for which you might have to go to some other supplier and ask him for credit and go through the entire process once again, right? So that is where the limitations were, and that is where we came into a picture where where we were basically providing them a financing limit so that they can actually procure whichever brand of raw material, whichever supplier they want to procure it from, and at the cheapest rate possible at that point of time. Because prices are very dynamic in the market, so that is where we actually solved a major chunk of the problem of all the SMEs.
So basically, you're democratizing purchase financing product
Exactly.
vis-a-vis the traditional ones. Okay.
Yes.
Who are your competitors in this field?
So I would say currently our competitors would be, those suppliers who are providing credit, to be very frankly put, but those are not NBFCs. But, there is a huge chunk of market which is also served by them. So I would say the competitors would be definitely the suppliers who are providing credit to SMEs currently. I do not see channel financiers as our competitors right now because of the limitations they have.
Other NBFCs and banks are your competitors.
I wouldn't say that. For example, say we'll discuss this going forward about the interest rates which we
Yeah,
operate at, and
yeah, 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 yeah.
all those nitty-gritties. So we generally operate at an
Mm-hmm.
interest rate of somewhere around 15 to 18%, and that actually shows up in our financials also. That we have a pre-tax ROA of 6% and higher, right? And if you compare it with any bank, a bank operates at 6 to 8%, and other NBFCs, bigger NBFCs like Tata Capital or say Cholamandalam, who are into channel financing, they operate at somewhere around 10 to 12%, right? But still, we are very much
Mm.
prevalent in the market, even though we are operating at 15 to 18%, because we are solving a major chunk of problem for the SMEs with
Yeah.
respect to ensuring that they get the cheapest cost for the raw material which they are procuring using our line at any given point of time. That is
Prior to your existence, your client were taking financing from where? Which are the names in the market who are prominent in this
major
field?
chunk used to be all supplier credit before this.
Okay, so you are saying no NBFCs was providing
Not really. So,
purchase financing.
not really. Before we entered, I don't think there were a lot of NBFCs. I think Tata Capital was doing a little bit of channel financing at that point of time. Tata Capital's channel financing actually became very much prevalent in 2016-17. That time, when they actually started financing initially all their distributors, and then to all the customers who were actually procuring from Tata Steel. And Cholamandalam actually recently got into channel financing where they are associating with a particular manufacturer. And so before our existence, I would say this was majorly supplier credit, and that is why it was very, very unorganized at that point of time. That was a space where we came and organized it and made a disruption.
Banks.
So banks definitely provide, but banks are not in competition because the primary capital which comes in to any SME, those are provided. That is actually provided by a bank, right? But all these SMEs are currently, I would say, they are underbanked. What do I mean by underbanked? Is that the limits which they have with these banks, it's not enough to actually sustain their revenues or to sustain their growth going forward. That is one. And secondly, if you actually go for an enhancement to a bank, it generally takes a lot of time to actually enhance your limits. And secondly, it depends upon the kind of collateral, the quantum of collateral which you are actually putting in the bank. So I wouldn't say, our competition is with banks at all. Banks are a primary source of capital for an SME, but never has been, enough to actually sustain the growth of the SME or sustain the revenues of the SME. And that is where a major chunk of supplier credit came in. And, I would say our competitors as well as our main competitors would be, the suppliers who are providing raw materials on credit to the.
And those suppliers are taking financing from their banks and NBFCs at cheaper cost.
Yes.
And they're keeping some margins and
Yes.
then they're passing on.
Yes.
And also the credit play, because lenders don't want to take the call on the SMEs. They will rather take a call on the supplier. So based on that, they prefer to give the money to the because they are into day in, day out with the SMEs. So they can control the finances. So, okay. Oxyzo is also providing purchase financing. So you guys are lending purchase financing since how many years? And so far, how many clients cumulatively you have funded?
Yeah, basically we have been providing purchase financing right from the inception of Oxyzo, I would say for the last 5 years. And since then, we have onboarded close to 4,000 customers.
Okay. And what is the ticket size you offer for purchase financing, and on what basis limit is assigned to the client?
So the ticket size generally varies from, say, suppose 50 lakhs to up to 5 crores also. But on an average, I would say if a collateral is involved while we are providing a purchase financing limit, it would be somewhere in the range of 1.5 to 2 crores on an average. And if there is no collateral, completely unsecured, it would be in the range of 50 to 75 lakhs per customer. That would be the average ticket size. So the limit is actually determined on a number of factors, but basically we have a risk policy associated with it, and we adhere to the risk policy. On an average, you can say that it would be somewhere around 1% of the turnover of the company on an average level.
Okay, got it. And what is the tenure of the facility you offer?
So the tenure is for 1 year. And after 1 year, it is renewed. We look into the financials of the company once again to see whether we want to enhance, reduce, and or continue with it.
So basically, if someone borrows the money and doesn't repays you till 1 year, that's okay with you?
Not really. So basically, there are two things. One is tenure of the limit, and one is the structure of the limit. So the tenure of the limit, what I mean is how long the limit is active before we actually go into a reassessment once again. The structure of the limit is basically they have to keep rotating that limit with us every 90 to 120 days. Depends from customer to customer once again.
Secured financing, what kind of cover you are seeking from the clients?
On an average, it would be somewhere around 1.5x. So generally, we take collaterals in the term of a bank instrument, or say suppose a property, or say suppose current assets. So we create a charge on the current assets to a certain coverage. We create a mix and match around these collaterals, and accordingly we provide a limit to the customer.
Okay. If you're doing unsecured, then how are you able to give purchase financing without any security collateral, and you are giving 50 lakh to 75 lakh? What are the bases you have decided on that?
The biggest, I would say, uh, um, we mitigate the risk to a certain extent, and as I was explaining earlier, also we have a control on where they are actually utilizing the funds. But over here, we know that wherever we are providing the funds, it is actually going into the business, and the customer has no option to actually add value to that commodity and generate revenues from it. We are not actually financing the SME in non-value adding segments of his business, and that is one of the major risk mitigation factors which we have while we are providing unsecured purchase financing.
Okay. Now, businesses from which industries or sectors can take financing from Oxyzo?
So, see, on a broad spectrum, we actually are very much prevalent in all the manufacturing based SMEs. Manufacturing in terms of auto customers or pharma customers, printing and packaging industry, telecom industry, to certain extent, textile industry. paper industry. So all these areas where manufacturing takes place, we are very much prevalent over there. With respect to securitized purchase financing, we are very much prevalent in infra segment, and infra can involve any and all kind of infra companies. Say, for example, companies which are related to irrigation projects or HVAC projects, or civil or building projects which are related to PSUs or governments, central government projects. So we are very much prevalent over there too. So these are the two major segments where we do purchase financing. There, of course, there are other segments also which we address, but with different products over there.
Okay. Is there any industry sector which is completely no, kind of a negative list for you?
Yes, there are a lot of industries where we do not want to actually get into, and we look
Okay.
at it on a case to case basis, but in general, it's a no no. So, for example, say real estate is one of those segments which we do not want to enter into. For example, we were discussing about speculative trading. So, those traders who are involved in speculative trading of commodities, we do not want to enter into that. We do not want to get into, say, hospital. We do not want to finance hospitals. We do not want to finance trusts or societies or schools. These are the broad list of segments which are negative segments for us. Of course, there are a lot of segments where we want to move with caution. So for example, the segments which are related to food industry, so we want to move ahead with caution in that. It's not that it's a negative segment, but we want to exercise a lot of caution before providing any sort of financing.
Okay. Say, for example, if in the food sector, if we talk about food agri kind of a sector, if there's a SME which is procuring and keeping as an inventory, speculating over the price, and then selling it, exporting or in domestic, that will not be your preference.
No, it won't.
Vis-a-vis, yeah, vis-a-vis in an SME which is procuring it and convert, say they're procuring the wheat and they're selling the atta in the market, that would be okay for you.
That would be okay with extreme amount of caution. So basically we will
Okay.
take some kind of a collateral from them, and with a lot of caution we will go ahead and provide any sort of financing to them.
Any reason for that? Because they are converting the raw material into the finished product and selling in the market.
Yes, value adding, but it has a lot to do with perishable product, non-perishable product. So food is generally a product which is perishable in nature. So there is a huge risk which is associated with that. So that is why we want to exercise a lot of caution while proceeding with any kind of financing for this.
Okay, got it. And typically, which all geographical locations Oxygen is covering?
So see, we have more of a cluster based approach, because this is very different from B2C kind of financing, which is based upon branch led approach, or say suppose tech led approach to a certain extent. But we have around 15 clusters across India, because most of the SMEs, they will be based across a particular cluster. So for example, say if you go to Bangalore, there will be a particular industrial area in Pina where there will be a lot of SMEs who will be doing manufacturing for auto companies or heavy machinery companies or something like that. So it's always a cluster based approach which we follow. And according to the cluster, we set up offices over there, and we are okay to finance within a radius of, say, suppose 100 to 150 kilometers around that office which we are having. So that actually also ensures that we have a good amount of control over the financing which we are providing, and that in turn also shows in our uh, GNPA numbers as well as the quality. And
So these clusters would typically be spread across how many states at present?
so we are prevalent across almost all the states, pan India, apart from a few. For say example, we are not prevalent in Jammu and Kashmir. We are not prevalent in Bihar to that extent, and we are not prevalent in say some northeastern states like Manipur, Tripura, and Nagaland. Those states we are not prevalent right now over there. But apart from this, we are having clusters in almost all the locations pan India.
Okay. So purchase financing is a standard product or a customized product from your bouquet of products.
So see, as I said, it is actually customized because of the structure of purchase financing which we provide. We do not actually limit it to a particular manufacturer or particular brand or commodity which they have to procure. It is actually widespread across the commodities. So that is the number one kind of a customization which we provide. But apart from that, we also club it with, say, suppose a dropline OD or a BL sometimes, where they can avail an extra limit or a particular set of limit which will address other parts of the other parts of their business requirement at that point of time. And another customization which we have is with respect to collateral. That is one area where we do a lot of customization in kind of collateral we take, how much exposure we take on a collateral, how much will be secured, how much will be unsecured in that. So that is the next level of customization which we generally.
Okay, so when usually they're standard products, the turnaround time is less, and when we are into customization of any product, the turnaround time increases. So in Oxyzo's case, what is it that if for a client who is approaching you for purchase financing and you are working upon on a customized vis-a-vis standard product?
So I would say the number one area where there could be an increase in TAT is basically when there is collateral involved, because otherwise it's just a structuring of a product which you are changing, and that actually does not increase TAT to that extent. So if I would say without collateral, we give out loans end to end, like right from the first contact to the SME to disbursement of the loan or disbursement of the financing. It would be somewhere around 5 to 6 days in case of no collateral involved, and in case of collateral involved, it would be, I guess, 15 to 20 days somewhere in.
Okay, so you're able to do all your due diligence for the SME in case of unsecured lending in due diligence plus your disbursement process and etc. everything in
Yes.
5 to 6 days. And in case where, yeah, in case of security creation is there, it will go around 15 days
Yes, 15 to 20 days.
because it will involve the due diligence of the security and then the security creation.
Correct.
So in case if it is any mortgage of the real estate properties there, that also you are able to do in 15 days?
Yes.
Okay.
So that is one of our strength points also, I would say, that speed of execution which we have, right from the touch point to an SME to ensuring that everything goes through seamlessly and the disbursement happens. Those TAT levels are somewhere where we are very, very strong at.
How the process moves, right? Could you just tell in steps wise, client or your relationship manager approaches the client or the client approaches you through your website or through physical meeting, and then how does it start till the disposal?
Yeah. So basically, most of our lead generation happens from a platform called Bid Assist, which most of our customers use in order to get more business for them, right? But that is one of our major lead generation areas. Now, once the lead is generated, we offer a plethora of products. And to be specific about Oxyzo, we provide them, avenue where they can actually upload their financials, and we can offer them a purchase financing limit per se. From lead generation to uploading of the documents, then there is and we convert that financials into 16 to 18 parameters, on the basis of which we decide the financial health of the company, basically the ability to pay of that company. On the basis of that, basically we have a small personal discussion with the company, where we go to the SME and we check whether whatever is being portrayed in the financials, whether that actually translates into reality or not. And We also assess the willingness to pay. That is the second aspect, which is very much important when you are lending. So after a brief personal discussion, if we have clarified all our questions, all our doubts with respect to the financials of the company, we go ahead with sanctioning the limit. Otherwise, there is generally a post personal discussion documents which we ask, which are a set of 2 to 3 documents which we ask, so that we get more clarity on the business of the SME. And post sanction, basically we have the signing of the agreement, where they sign the agreement, and immediately we disburse of the funds to their suppliers in order to finance their.
So your sanctioning process is all internal tech based, or human interventions are there?
See, with respect to documents coming in, translating those documents into readable numbers and parameters which we have laid down, 16 to 18 parameters which are laid down, that entire part is tech. So it is completely tech driven over there. Where the physical intervention comes in is basically, when we actually go to the SME and do a personal discussion with them in order to ascertain, the willingness to pay, as well as whatever is being portrayed in the financials, they are actually there in reality or not. So that is where the physical intervention comes in. And of course, there is a bit of sales intervention also over there, where they try to develop a relation with the SME in order to explain them even further as to why the product is beneficial from them. Of course, there might be certain questions or doubts with respect to the product which is being offered by purchase finance. So that is where the sales intervention also lies in.
Okay, so basically, physical interaction with the client is not completely off. You do have a dependence on the physical interaction, the meetings, visits,
Yeah.
execution, or the recovery part with the clients.
Yes, and we would like to keep it like that, because that is where you will actually have a control over the customer, because the kind of financing which we are doing, which is generally a high ticket size transaction for unsecured purchase financing. So we want to have a physical interaction with the SME, where we understand the SME even better and ensure that the quality of the book is maintained well enough.
So, as of now, how big would be your client facing team?
So our client-facing team across Pan India would be somewhere around 95 to 100.
Okay. So, while they are meeting the clients, if so, or your lead generation is happening tag based, right? So, what is the first level filter to select the client to take it ahead for credit appraisal process?
So see, the first level filter is basically very three simple factors. We look into the turnover of the company. So as per the industry, we have specified a few limitations with respect to below certain turnover. We do not want to go. For example, say for manufacturing industry, we do not want to lend currently with less than 20 crores of turnover SME, right? So that is the first level of filter which we have, which is the revenue of the SME. The second level of filter which we have is the nature of business. So for example, say it is into manufacturing segment, of course we are going to do it, but if it is in trading segment, we do not want to get into. Or if it is in say suppose any service providing segment, of course there we want to get in and do some kind of financing over there. So that is the second level of filter. And the third level of filter is basically the sector which they are into. So for example, say if they are not in a negative industry, for say in real estate, or in kind of trust or society or school or some hospital kind of business, say suppose any trading business, some lottery agencies for example, so we do not want to
Yeah,
get into that.
yeah.
And that is the third level of filter which we have. So these are the basic three level of first filters which we have, before which we start the credit appraisal.
Okay. And so, what about the underwriting principles which are followed after this?
Okay. So see, we have, according to me, we have one of the best in class risk policies which is out there, and which actually shows up in our GNPA. Of course, our GNPA is at 1.2, but our net NPA is even lesser. So it's somewhere around 0.6, 0.7. So that actually shows up that our risk policy is best in class as of today, according to me. But what do we look into when we are underwriting an SME? So basically, we have determined parameters around various aspects of business of the SME. For say example, how much is the DSCR coming out to, how much is the working capital cycle coming out to, whether the SME has a positive net worth or a negative net worth, or say what is the banking turnover coming out to be. So there are a number of factors which we check with respect to the financials of the SME. There are a lot of things we check with respect to, say, whether there is any political connect of the promoter with any of the political parties. And yeah, so that is where we want to proceed with a lot of caution and generally stay away. If there are any litigation cases which are going on, NCLT cases which are going on the, so that is another level of filtering which happens while we are doing the underwriting of the SME. And the most essential, I would say, is a kind of a apart from this, after we sanction the limit also, or before sanctioning the limit also, sometimes we have a 360-degree feedback. Now, what do I mean by this 360-degree feedback is that, although the financials of the SME might say one thing, but the relationship which they have had with, say, suppose their suppliers, that might be completely different. You never know, right? So that is where we actually go to the suppliers and take a feedback of that SME, where we ask them as to what is the quantum of business they have been doing with the SME, for what vintage they have been associated with the SME, and what is the general payment cycle which they are associated with, and how have they been the payments of this SME with that particular supplier. So that is one level of feedback, real feedback which we collect, and on the basis of that, we make a decision. But post that also, post sanctioning also, and post disbursement also, we have a very, and that is where again tech comes into picture, where we have a very dynamic credit monitoring process, where we monitor as to how many times is the customer rotating with us, whether he is going into overdue at any point of time, at what point of time is he going overdue, what kind of suppliers is he making payments to, and with respect to any issues which happens during that tenure, you will actually get to know through this credit monitoring process. You can actually get to know when exactly the SME is a bit stressed, and when it is having a smooth ride, basically. So that is a complete end to end connect which we have for the entire tenure of the SME, where we monitor financial health of the SME over the entire tenure through some way or the other.
Okay, so post disbursement, how you manage tracking of their cash flows or the bank statements? Is it through TAC or is it manual?
Okay. With respect to getting their bank statements, we do not do that until the renewal comes in, or until we feel that we should enhance the limit of the SME. But what we ask the SME to do is whatever supplier payments they make, they can make it through us, right? So indirectly, we are capturing a large part of their cash flow. So that is where you do not actually need banking from the customer, but it is a virtual mimic of what is happening in their bank statement, where almost any payment which they are making to the supplier, they are actually making it through us, and rotating the limit accordingly. So that is how we get to have a very good understanding as to how the SME is operating at a particular point of time, and we get to exactly know as to when the SME is getting into stress. If there is any change in behavior, we'll get to know eventually that this is a change in behavior which is coming up, and this is where we need to exercise caution.
Are you using technology post disbursement to do some kind of monitoring?
This entire process is tech based. Post disbursement monitoring of client is entirely tech.
You're not dependent on client to provide any data.
No, not at that point of time, unless we enhance the limit or we are actually renewing the limit.
And what is a typical rate of interest range at which you are lending, or is there any benchmark you have linked yourself to?
So we generally lend in between 15 to 18% per annum, and there is no particular benchmark we are fixated upon. But if, to be very frank, we want to be cheaper than the supplier credit which is out there in the market, and generally supplier credit out there in the market is somewhere in of 24 to 30%, right? So that is where we want to be cheaper at all costs, but there is no particular MCLR or anything which we are keeping as a benchmark.
So rate of
Yeah.
interest is fixed or floating?
So rate of interest is fixed, and we do not benchmark it to any other index out there. Say suppose MCLR or anything, we are not benchmarking it to any index, and we operate at generally in between 15 to 18% per annum.
Okay. What are the other products which are provided by Oxyzo apart from purchase financing?
So apart from purchase financing, we do drop line OD based products, and that is for a lot of service providers which we work with, and that is where they need an OD kind of a product which can take care of their immediate requirements with respect to certain expenses which they have for providing the service to the corporate. And we also do business loans, but they are generally clubbed with purchase financing. So that is one other product which we do. And we also do a lot of receivable based financing, where we are factoring invoices of good anchors, good corporates, where they are supplying to good anchors or good corporates. We also sometimes do capex financing, where we have comfort in with respect to financing certain machinery which they have, but that is very very limited. We That portfolio is very very limited. We do not want to go very aggressive on capex financing. Apart from this, we also finance for a lot of new age companies, emerging corporates, where we structure it for their working capital requirement, or say suppose a bit of capex requirements.
Okay. Could you just give few examples for drop down OD and emerging corporate or new age?
Yeah. So see, for dropline OD, so for example, which are the companies which are IT service providers. So that is one segment where we are very much prevalent in terms of dropline OD. Benefit of this product is very much similar to a business loan, but it gives the flexibility to the customer that whenever they have funds with them, they can pay it off and close the loan and use the loan once again whenever they require it, right? So there is no foreclosure charge or anything which is associated with it. So that becomes very much beneficial for service providers. So that is where dropline OD is very much prevalent. With respect to new age or emerging corporates, so we do a lot of structured products with them, where we take charge of current assets, and we provide them a working capital limit for financing their purchases, or provide them financing for capex in order to so that they can grow. But these are for high growth companies. So what I mean by new age is basically high growth companies or emerging corporates which are having a very high rate of growth.
Okay, got it. So next 1 year, where are you focusing as a business head? Which product is the main push?
So going forward, we want to get deeper into our association with the SMEs. As I was saying earlier, we haven't even scraped 1% of the market currently. So we want to get deeper into the markets available to us. And while we are doing that, we want to, of course, grow fast, but we want to grow responsibly. And what I mean responsibly is that we want to maintain top-notch quality of the book we are building. With respect to the AUM, our aspiration is to triple the AUM this year. Of whatever the AUM is currently, we want to triple it by next year. But while doing that, we want to bring down the GNPAs less than 1%. More importantly, we want to ensure that we are maintaining our pre-tax ROA of 6%.
Okay, very interesting episode today, Pratyush, on purchase financing. And I'm sure a lot of our listeners would get some clarity from this and also a one more avenue to go to your platform. So now we are
Yeah.
going to move towards the last section of the episode where we will seek some guidance from you for our listeners. Could you just share some two, three guiding principles?
Any entrepreneur should do in order to make a successful business, I would say number one is to build a great team, because that team is going to take it forward, and that team is going to make a company sizable, scalable, as well as a unicorn or a decacorn or a pentacorn eventually, right? So make an amazing team, and ensuring that an amazing culture is being created in your company. So for example, with respect to Oxyzo, we have an amazing team, and with respect to the culture which we have, we all are family members, so we all consider each colleague of Oxyzo as our extended family member. So that is the kind of culture which we have built, and which drives each and every one to the final motives which we want to reach to, right? So team and culture play a very, very important role, and if that is done currently, that is correctly, you know it would be one of the greatest and most contributing factors to the success of a startup. Apart from that, the second long-term thing which anyone should be focusing on is building a profitable business. It may not be profitable from day one, but it should make sense on unit economic level. The unit economics should make sense. It should not be loss making at unit economic level. If it is loss making at that level, you are getting into the wrong kind of business, and you should pull back and reassess what kind of idea or what kind of business you should get into, and eventually go forward. Again, giving an example of Oxyzo. So we have been profitable from day one with respect to Oxyzo, but as a group, we ensured that we never did. We never tried to do, or we never did any transaction which was at loss. We never did that. So whenever we saw that we are going to have loss in this transaction, we just we didn't want to do that. We didn't want that customer at that point of time, or we didn't want to make it a norm going forward. So that is one principle which any entrepreneur should abide by, that you should be profitable on unit economic level, and eventually try to build a profitable business. And thirdly, uh, it might be very easy to say that build a profitable business, but once you find out that idea which is actually ensuring that you are building a profitable business, the next hurdle which you face is basically with the scalability of the business. So ensure that you are getting into a market where the TAM is huge. It should not be a small TAM kind of a market. If it is a small TAM kind of a market, ensure that your margins are such that they can compensate for the smaller total addressable market. But ensure that you are getting into a market which is huge, where you can scale up the business.
Great.
Yeah, so those are the foundation steps, say, for making successful business. I would say these things, which I feel are very, very important, which any entrepreneur should do, is that always listen to your customers, because they are your number one feedback point. And once you listen to your customers, that is when you will be able to figure out as to what product will actually work, and what product you can actually build for your customers. So that communication is very important with your customer, and ensuring that you are taking the feedback from your customers in order to build the right product for your customers. So I would say that would be one short term tip which should be kept forever, listening to your customers. Second, I would say price the product right, whatever product is being built, price it right and sell it right. So it's very simple to price very low so that it sells easily, and it's very easy to price it very high so that it doesn't sell at all. So it's very important that you price it right and you sell it right, and you have to strike the right balance between them so that you know your business makes a lot of value as well as a lot of profits or income going forward. And the third thing I would say is a short term tip, but eventually, even though you become a unicorn or a decacorn or a very big company, it is always important to stay frugal. Uh, each and every cost which is coming to your business, it actually pulls down your profits. So it's important that you stay frugal. To this date, each and every one of us in of business as well as Oxyzo, we have ensured that even if there is a minute chance of saving cost, we will save the cost over there. So it's very important that you stay frugal in order to become something very profitable and something very big. Those tips, if it could be followed over a period of time, they would make much more sense.
Okay, great. So thanks a lot, Pratyush, for coming on MSME Talk podcast and sharing, an overview of purchase financing for our listeners, and also going deeper in how Oxyzo is building up purchase financing for the SME sector and bringing an impact through the mix of technology and the physical relationship, because that is something, I think this one of the differentiation, because nowadays what's happening is with a lot of tech coming in, and fintech, everywhere we have fintechs working, physical and relationship aspect is reducing.
Correct.
We are, yeah, even someone wants to talk to a customer care nowadays, most of the places bots are there. So even if that, to that level, there is coming a gap between the human beings, between
Right.
your clients and the organization, while you are building, which is where you are using the best of both the world, tech and the real world, and building upon their business. And might be this could be one of the secrets of Oxygen's unicorn status in a short while period.
Yeah, true.
So thanks a lot, Pratyush. We'll catch up again for some other topic. We have a lot of things to discuss with your group.
Sure. Thank you so much, Tripti. It was really amazing and thrilling to be a part of MSME Talk. A lot of my friends have heard podcasts from MSME Talk, so it was actually a thrilling experience to be on.
Thank you so much, because we are here to spread the knowledge and information to the MSMEs.
Sure, definitely.
Hey, if you like the information shared on the podcast, why don't you give some good reviews to us on Apple or Spotify? Through this episode, I hope you would have got some answers to your queries and guidance for way forward. Do share your learnings from the episode, your feedbacks and suggestions. If you are an entrepreneur and have questions from experts or any particular topic or profile of expert you want to hear, or if you are an industry expert with MSME as a target audience, do reach out to us. Our link is given in the description. And at last, please do subscribe for MSME Talk podcast, and don't forget to share the podcast link with your friends, family and network. Take care. Goodbye. Happy to share MSME Talk podcast enters peak ranking chart of 10th country in the Apple Podcast country level entrepreneurship category. If you are an expert or provide product or services to small businesses, MSMEs and startups, reach out to us to discuss showcase opportunity in MSME Talk. Contact details given in description.